Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, September 16th, 2019 edition of the DecisionPoint Show. And I am here with my father, Carl Swenlin. For those of you joining us for the first time today, welcome to the show. And of course, for our DecisionPoint faithful, as I noted, welcome back. All right, how are you doing today, Dad? And what do you think of these markets right now?
Well, I guess we'll get into that, but yeah, I'm doing well, and I can't wait to talk about oil.
Yes, I know everybody else is dying to hear about oil as well. What a chart that is.
Yeah.
All right. Okay, well, let's see. What are we going to be doing today? Of course, I'm going to look at our price relative charts and the global market charts that you're used to seeing in the weekly wrap and in the DP alert. I do on Wednesdays. We will be reviewing those broad market indexes. I will be including a sentiment update today for you. And then Carl's going to be going over the big four: dollar, gold, oil, and bonds. And of course, we'll both be covering these DP indicators. And then, of course, as our final, Carl always brings in interesting charts that he likes to show. And I'm looking forward to seeing what you have for us today. I know that beautiful yield chart with all the colors will probably be there, though.
Oh, that might be.
I always like to see that one. All right, so let's go ahead. We'll start off looking at the DecisionPoint scoreboards. At this point, you can see that our trend models are all on buy signals. This tells you that all of the EMAs are lined up positively, meaning that those fast EMAs are on the top with the slowest ones on the bottom. So that's what you want to see. So we are in a nice rising trend currently. PMO, on the other hand, is a little less behind everything. We do have the short-term PMO buy signal that came in at the end of August for most of these indexes. And, right now we're still waiting on the midterm or the intermediate term PMO signals. Those come off our weekly chart. I'll be just showing you those real quick so you can see what's happening with these signals. And then as far as our DP sector scoreboard goes, it's looking a lot more green than it has in the past. We've been flipping into buy signals after a lot of neutral signals in the intermediate term trend model category. Right now, the only ones we have left that are not on buy signals would be energy, which has been lagging quite a bit. But of course, today oil took a nice move to the upside, so it might be begin to affect XLE. Healthcare, we are at a neutral right now on that, meaning the 20 is below the 50-day EMA for healthcare, but the 50 is still above the 200 for healthcare as well. So this would be considered a defensive area. The financials and energy are sort of the transitional sectors between, your aggressive discretionary and technology. And then staples, of course, would be another defensive category with real estate and utilities. All right, so let's go ahead and look at some charts. That's why y'all are here. So let's get it going. I am going to start off right here with, of course, our lovely dashboard. But if I can get my clicker. I always lose my, it's very strange. I always lose my mouse and then I can't get anywhere here. Okay, so that's my dashboard. Come on, come back. Okay, there it is. All right, every now and then we have to go through that. Okay, so I showed you the scoreboards already at this point. So let me go down to our chart list. I'm going to start off with the relative chart. All of these charts are in the DecisionPoint Live chart list, and you will find that link at the top of our blog page. So just go to articles, click on the DP blog, and you will see the link for the live chart list right there at the top. So these are the charts that I do keep annotated for you so you can keep up with what we're looking at. At this point, relative chart, we are seeing the small and mid caps finally making a move to the upside as far as price relative. And, there's a lot of people wonder, what does that exactly mean? It means that it is performing better than the S&P 500. And that can mean two things. Number one, it's moving faster to the upside than the S&P 500. Or if we're seeing a decline like you see back here, we could be that both are declining, only the S&P 400 and 600 are not declining as quickly. So they're performing better, basically, and we want to see that happen. Typically, when they start to perform better, the market starts to perform better. And that's, of course, what we want to start seeing is those the participation here of these small and mid caps right there. All right, next up are our global markets, and really not much to improve upon what we've talked about and what Carl talked about in the weekly wrap. But the only thing I would say, looking at these, we are starting to see, as far as the Canadian TSX is concerned, we're now flirting with those all-time highs. I think it may have actually set a new one. And we have the Nikkei. We're actually seeing the Japanese markets on a nice rally alongside of us, and now they are breaking out of the declining trend that they have been in their bear market since October of 2018. Next up, let's start looking at some of our daily charts here. And the Dow at this point, one of the things I'm noticing on our daily charts, and not all of them are this way, but we have a lot of reverse divergences is what we call them. And that is the fact we have volume coming in strong. It's coming in strongly, but it's not propelling price as high as the last price top, right? So it's a lower price top, but we're seeing the volume tops moving higher. That's telling us that, despite all of that volume coming in, we weren't able to push price up past that previous all-time high in this case. So we turned down a little bit before challenging that top. And so that's what set up this reverse divergence. I'm just going to quickly look at these weekly charts to tell you, when you look at them, it looks like we have a buy signal. But we don't log that buy signal until Friday. So as of last Friday, the PMO was below its signal line. So that's why on these scoreboards, we're still waiting for those buy signals to come in. So don't be confused when you go look at these weekly charts and you see a buy signal, but it's not on the scoreboards. That would be why.
Because by the end of the week, that PMO could sneak back down below the signal line.
Absolutely could. And that's, there are a lot of things to consider. And that's one of the reasons we don't log those intermediate term signals until they go final. That's what we always talk about. The charts went final, the indicators went final. That's what we mean. All right, so looking at the NASDAQ 100, still on that buy signal, noticing a little bit of deceleration on the PMO, but that makes sense with this pullback we're looking at right now. The one thing that worries me, and in this case, this is a negative divergence, we have volume tops on the OBV declining, but the price tops are in a major inclining higher, much steeper. And that sets up a negative divergence, because at the same time, we don't want volume. We want volume to come in, like we were talking about with that reverse divergence. We want that volume to come in along with those price tops. But if the volume's just not supporting a move to the upside, that can tell you there's some probably some things going on underneath the surface internally that you should pay attention to. So at this point, the volume's just not doing what it should for the NASDAQ 100. And there you go. In the NASDAQ 100's case, we still aren't even close to that weekly buy signal for the PMO. And OEX, S&P 100, you've got that reverse divergence going on, still on the buy signal. On the weekly chart, same thing. It hasn't, it looks like it has that PMO buy signal, but it does not for real, because it hasn't gone final. And of course, the S&P 500 chart, which is the one of excitement, of course, we want to look at. Now, in this case, we have that negative divergence as well. Now, I didn't connect this top to that top. What I was looking at right here was we had these rising tops coming in right about here when we had the flat ones. So that was sort of a precursor to the breakout that I was looking for. But now we have a reverse divergence, because this top is higher than the previous, and we did not challenge it or exceed the all-time high. Weekly, again, waiting on that buy signal, was not there Friday. Looks like it might come in on this Friday. All right, just a quick peek at our indicators, and this will be a good chart to even move into the sentiment, because I look at the VIX for sentiment. as does Carl. And the one thing I wanted to note as far as our climactic indicators go, I don't see any climactic readings on this chart really at all. But what I would note is the decline in volume on this rally. That's also a sign that there might be some problems underneath the surface. So just something to consider. And then when you look at our breadth numbers, they just keep moving to the downside, despite the fact we're seeing these moves to the upside on price. The VIX, we've been watching it typically when it hits or penetrates that upper Bollinger Band, that's when you start looking for lower prices. Well, as you can see, the bands just sort of expanded, and we're getting lower and lower VIX readings, but the Bollinger Band is expanding with those. So at this point, we just now saw this drop as far as the VIX, people getting a little more nervous, that reading moving a little bit higher, and that tells me that this could be the prep right here for more decline going on, just because of the nervousness and fear that's starting to come back in. And then when I look at the short-term indicator charts, I think this also is telling us we could be in for a little bit more decline. You've got overbought readings that we had on the Swinlin trading oscillators, and now we're starting to see them turn back down. Typically, that happens, during a price decline. We've topped, and now we're starting to move down, and that tells me that I should probably expect some prices to the downside. Intermediate term, while these had been looking good, they're now very overbought. We have seen higher readings, at least as far as the ITBM, and you can see we actually had higher readings on the ITVM than we do now. But we're in really overbought territory for these indicators, and that we need to watch, because when they start to really turn, you can see in the thumbnail they're starting to decelerate a little bit here. But these tops on these indicators definitely aren't generally a good thing to see. We could end up seeing more of a decline here. But at this point, they're still pointing to the upside intermediate term. Like I said, all of those trend models are moving the right direction. So let's go look really quickly at some sentiment charts. I want to definitely leave a lot of the program for my dad. So first off, we're looking at the put-call ratios. I do invert this because oversold should be on the bottom and overbought on the top. And as you can see, we're pretty much neutral, but we are moving to the upside, and we're starting to reach overbought territory as far as the put-call ratios. And again, watch the price. When we start to see these top out, and that we do get a little bit of they do tell us a little early when to expect these declines when we get these tops. As you can see, they're coming in right before the big drops. And so we're not overbought totally here, but we need to start watching for those to turn over. AAII, you can just see the increase in bulls and decrease in bears. And again, when people start to get very bullish, that is a sign that you're going to start seeing prices decline. And as you can see, we now do have a little bit more in the way of bulls than bears. What I noted with all of these is we have a lot of neutral people right now. A third of the people out there pretty much are neutral. A lot of indecision and confusion, and that generally is not a good thing for the market. Name exposure, we are seeing the money managers increasing their exposure to the market. And we're not at overbought readings by any stretch of the imagination, but we are seeing them creeping back in. And they're a lot of times right. So we really, I think for them, you watch just to see what they're doing, and then plan accordingly. They do tend to be correct, I think, usually at the beginning. So their exposure is higher, but it's still in neutral condition. So Wall Street sentiment, again, we're looking at like a third, out there neutral. But we certainly are seeing a little bit more in the way of bears. But really overall, the ratio is almost 1. So not a whole lot of information there. RIDEX ratio really quickly here. We can see the ratio is starting to move to the upside. What I noted most about this chart when I looked at it is the decrease in cash. a lot of people are at least off the sidelines, and it appears they are creeping more into the equity category than in the inverse or bear fund category. I think it's just we're getting toward the lows here on the cash money market assets, and so I find that interesting. We're getting to that point where where people are a little less nervous, more bullish, and that tells you to look for downside. And finally, I'll just look at our gold chart real quick so you can see the current discount premiums. And it's a closed-end fund, Sprott Physical Gold Trust. So we track the discounts and the premiums based on the price that it recently sold for. And as you can see, we have discounts that are still fairly high. Certainly, we've seen higher. This tells us that people are more bearish. The bigger this reading is, the more bearish they are on gold. And a lot of times it's going to precede, a lot of high bearish readings will sometimes precede a nice move to the upside. Right now, we're still seeing those discounts despite a really nice rally to the upside. Still seeing a little bit of that bearishness. So I'm going to pass it back over to you, Dad, and let's see what we have to see. And I know oil is going to be a big one.
Yep. Let me see if I can get there.
Oh, I know you can.
Here we go.
All righty.
Okay. We'll be to oil in a minute. I always start with the dollar. It's still in a rising trend. It's a rising wedge, but narrowing very slowly. And PMO is positive and moving sideways, which means it's pretty much a steady beat moving higher. The weekly chart just demonstrates how far we are above that resistance line. It's still not 3%, so it's not a decisive breakout, but it's not doubtful looking at this point either. You just showed GLD. This is the continuous contract actual price. And notice we still have stayed above this rising trend line and losing some acceleration on the PMO, but I still think it looks fine. I'm going to skip right over the weekly and go to USO.
Yes.
I can't remember exactly what I said, but on Friday, see, the good thing about writing commentary on Friday is there's Saturday and Sunday, so you have almost 3 days before the market proves you wrong. So here, I've been saying that this looks like the range is probably going to maintain it. Certainly this range right here, I think, is much more likely to contain it. And today, what was it up? It was up 12%, based on the bombing in Saudi Arabia from the drones. And I think this is overdone. But you have to say, if you're really going to worry, well, it could mean that there's something really getting started in the Middle East, and that might really put a choke on the supply. But right now, Saudi Arabia's production is, according to what I heard today, was down about 5%, which is just an infinitesimal amount compared to the entire global production. So at this point, we may have some people, buying like crazy, but I think it's going to settle back down into this range, to tell you the truth.
Mm-hmm. More of a mania.
Right. It's just a panic. And but I only have 1 day, well, actually not even a whole day before the market can prove me wrong on that.
Mm-hmm.
I like to put the uh, WTIC chart up, and here's the range we're looking at. It's 76, maybe 77, and 42. That is a longer term range. I just really don't see it getting out of that. That's just my gut. Okay. This was one too, as the last time, let's see, this was a Friday when it was still above this. Somebody said, it looks like a flag. And I said, yep, it does. And of course, the next day was Monday, and there it goes. So this was basically a lot of over exuberance of, of interest rates coming down. So people were bidding the treasuries prices higher. But now I think it's settling back down a little more realistic. If we look at the yield, the bond yield, 20-year bond yield, you can see that is starting to pick up again. I would, I'll just go with this, the rising trend line. Probably would be where it holds. It could be, maybe this is as low as it gets, but I think it's going to start settling down. And here's our short-term yield array. Hasn't updated yet today. The yield charts don't update till much later in the daily build, and that's something's got to be late and something's got to be early. So this is one of the things that are late. But you can see the yield is really picking up across all time periods, and at least the 20 and the 30-year are back above the 1 and 3 month. And here's the long-term chart, which will take a while to load because it's so congested. 1962, it just so happens that year I turned 21.
Oh, everybody's going to be able to do the calculation now.
So this is during my lifetime. Right now is different than any time before. We had this, but basically we're starting out now. This time we're starting out lower than this time. So this is different than anything I've ever seen, and I never paid any attention back in here because I didn't know anything about that.
Mm-hmm.
I can't say it's never been like this before, but it's like really is. This time is different, and all these times along in here were different. Okay, I wanted to look at the BPI. Oh, wait, first I got the golden cross chart and the silver chart. Silver cross chart. And I forgot to get the labels on them. But here's silver. This is the 20 crossing up through the 50 EMA. It's more active. But one of the things you notice here, we've got this price high, and this is actually slightly higher, but the number of stocks that are on buy signals is much lower than here. Of course, we had the same problem from here to here, and this doesn't bode well. The Golden Cross really tells us that there's still not a lot of stocks that have broken down and gone into death crosses, but this is not really helpful in terms of over the intermediate term.
Mm-hmm.
They added a colored panel on this to help distinguish between each of the BPI basically gives us a really good idea about overbought, oversold. It's similar to the Silver Cross index. Silver Cross is a little smoother and it has it's a wider range than but it's just essentially just as useful in terms of overbought, oversold. Where you can see when it starts to get up in this area, it's getting overbought. And so as you're thinking of putting on more longs, you got to be careful that, it doesn't hang up in this area for very long. Here it did. Here it took you about a month to roll over. But it's not, now you want to start being a little more careful. And this shows all three of these major indexes have got a similar situation. The New York Stock Exchange Composite being the worst, getting close to, it's down at 55, but it's getting close to half of stocks in the index being in the ditch. Erin, you've done this one. I put a BPI on this chart for the very reason that it's very helpful. It's a direct reading of price. Whereas the ITBM, a lot of indicators are kind of one or two steps removed from directly to the price. Everything comes off of price, no matter what it is. But the main thing here is the BPI is a direct reading on how many stocks are actually on buy signals. And so these are getting overbought. This is basically overbought in the range if you're looking at the declining tops line. I am not sanguine about the market condition and trend at this point. I think we really have some problems. We've got about a minute left, haven't we, or two?
Yeah, about a minute and a half.
And here I still go back to the stocks above their moving averages 20, 50, and 200. You can see here again, those are in an overbought condition. And notice that the stocks above the 20, that's about actually 15% below this top. So it's showing some divergence, a negative divergence. Again, these are direct readings off of price.
Mm-hmm.
Do I dare try one more?
Oh, go for it. One more.
Okay.
Quick, 15 seconds.
Okay. We'll check this one next time, I think.
Okay. Yeah, we've got about 40 seconds. I did want to mention, if you haven't checked out our DecisionPoint blog lately, besides Carl's weekly wrap that he wrote on Friday, I just started a new daily newsletter called the DecisionPoint Daily Diamonds. And I use our analysis processes to narrow down to 5 stocks that you might want to look at as diamonds in the rough. So go check out our articles in the blog. And thank you for joining us today. It's always great to have those DecisionPoint faithful and hopefully a few new ones. Do take that survey as you exit, if you could. It's just right there to the right of your viewer. And we will see you back here on Monday. Happy trading.